South Korean chip giant SK Hynix making Wall Street history with a record U.S. share sale in ADR offering as a foreign company. It's also number 2 after SpaceX for share sales in U.S. history. The company prices ADRs at $149 each. That's a 2.7% premium to its average price over the past 3 days. In Seoul, the company shares closing marginally lower today at more than 2 million Korean won a piece. SK Hynix's listing is significant, not just because of its size, but because it comes at a time when investors are questioning overvaluation in AI-related stocks. And we're joined in the studio by Rolf Bulk. He's a head of Semiconductors and Infrastructure at the Futurum Group. Thanks so much for joining us, Mr. Bulk.
Thank you.
Okay, I did not say the figure, but it was on screen. So $26.5 billion, not something most of us would sniff at. But if we look at SK Hynix, profit for the first quarter, in fact, exceeds this fundraising.
Yes, exactly. Thank you for having me. And it is an exceptional IPO for many reasons. The first is, of course, the headline figure. 26.5 billion is very sizable. That said, this is for a company whose share price has gone up over 500% over the last year alone. So SK Hynix, with this IPO, is really capitalizing on the fact that the memory cycle is booming and that they are one of the main beneficiaries of this trend. And to put the 26.5 billion into context, I expect that SK Hynix over this year alone is going to do over 90 billion in free cash flow. So it is not that they necessarily need the proceeds of this IPO, but it does allow them to expand into a broadening US investor base, which is something that they have not had previously.
Oversubscribed 7 times, these shares, this debut in the US. But if we look at the last 2 weeks, shares in Seoul dropping about, losing a quarter of their value.
Yes.
Nevertheless, and before we got to you, we were saying concerns about overvaluation, AI-related stocks. But this part, so you mentioned memory cycle, this part is not suffering from concerns.
Yes, and well, you know, SK Hynix shares up over 500% over the last year alone, but some of SK Hynix peers, like Kioxia in Japan, up over 1,000% over the last year. So memory is one of the critical bottlenecks in the AI infrastructure build-out. And these companies are having a moment in the limelight at the moment. That said, valuations for SK Hynix, it only trades on around 5 times forward earnings, which is very low. And NVIDIA, to draw a comparison, trades at around 20 times. So despite this rally that we have seen, valuations are still very attractive. But the share price weakness that we have seen after 500% rally, I would consider that to be a healthy normalization more than anything.
But we might need, for those same reasons, to be more concerned about, say, OpenAI and Anthropic. They're on different sides of the AI supply chain. Why would we need to worry about overvaluation there when at this point in this cycle, we do not need to worry about SK Hynix, NVIDIA, or, say, Samsung Electronics?
Yeah, it's a great question. It's all about where that incremental dollar of spending is going to go to. And that all depends on the bottlenecks. So in SK Hynix, Samsung, and NVIDIA, they are so well positioned because they are the only ones who can provide those critical chips that an OpenAI and an Anthropic need to provide their services. So they are well positioned, and likely that is not going to change for the foreseeable future, given the demand that we see out there for AI.
The build-out, though, say data centers, which run, at this point, we need speed, and that's what HBM, so high bandwidth memory chips such as SK Hynix, in fact, primarily used by SK Hynix, the dependence on that. But if the build-out is not sustainable, is not secure, this demand might also come under threat.
For SK Hynix, and it's a good question, for SK Hynix and Samsung and Micron, it is all about that balance between demand and supply. So as long as the demand for these chips, these high bandwidth memory chips, continues to exceed their ability to supply, the prices for the chips are going to continue to increase, and memory manufacturers are going to benefit. Now, the risk is if the capacity expansion is ramping up. If SK Hynix, Samsung, and Micron ramp up at a pace that exceeds demand, that is the moment that the cycle could turn. But we are nowhere near that moment as it stands.
In fact, Jensen Huang, NVIDIA CEO, saying he expects few years yet of strong demand in memory chips. Thanks so much for joining us in the studio, Mr. Rolf Bulk, Head of Semiconductors and Infrastructure at the Futurum Group. Thank you.
Thank you.